All right, we're going live. Let me get a screen up as fast as I possibly can, and hopefully I can. All right, here we go. We got a screen up. So there we go. We're gonna take a look at Oracle today. I'm gonna go over it very briefly. So if you have any questions, feel free to ask those questions in the chat right now. If you can hear me, let me know as well. Let me know if you can hear me. Let me turn this down. I hope that you can hear me. So let's see here. Oh, you know what I'll do? One second. So I'm gonna give people time to come in, and I'm also going to check myself in the background because I know I'll be able to hear it. Let's see if I'm able to hear it here. One momento. Testing, testing, testing. Custom. I would hate to go so live and not. Testing, testing, testing. Okay, it works. All right, great. We're here. Welcome. I'm Immaculate Tony. I know that took quite a minute, but things happen. It's life. So I'm Immaculate Tony. That is my alias that I chose to go by, representing holistic traders. We can all be a holistic trader. You know, holistic trader it's a group. It's a group of holistic traders that trade basically on a certain risk of plans of it's a whole thing. It's a group of holistic traders, and it's something that you would want to be a part of. Why? Because we're all working together to accomplish the same thing. Imagine having a team of people that's all operating under the same trading system. If one person says, "Hey, this is a great trade to look at," the next person would most likely say, "Okay, let me take a look at it because that's a holistic trader. I'm a holistic trader. Let me take a look and see because it's one trading plan, one band, one sound is the kind of mindset that I want to go with. But we're going to focus in on Oracle. If you have any questions, feel free to let me know. And let's get started on some charting. And I'm just going to run by it. This is pretty much me freestyling, which is what I like to do. Going off my head with the information that I do know and how I chart. I'm just going to go through how I normally would chart. If you check my last live, it'll be pretty much of the same thing. And things change as the days change. So starting out, the first thing I want to do when I'm looking for so I want to find out the current price is obviously the first thing you want to find. And then I want to find also some support and resistance. So I have steps that I go through. And number one is CMP. Find the current market price. The current market price for Oracle right now is at 151. The next thing I want to do is look to the left. I want to look down to the left and I want to find pivot points. So what am I doing right now? I'm finding pivot points, which are AKA support lines. So now based on this right here, okay, well, let me finish going through this. Step 3 is we got to look down to the left. We want to go to step 3, look up to the left. And we're looking for pivot points. Once again, we're looking for pivot points. Where did price make a turn? Where did it make a sharp turn at? Right? Let's see here. And I'm changing the color so you can see that it's support and resistance. Green represents support. Red represents resistance. Okay. So now looking at this, this is just based on the monthly. I went to the monthly because it's clearly easier to see. It's easier to see the monthly, the pivot points. But now I operate off the weekly time frame. But now I at least have a plan now. Just right there alone. And what I'm gonna do, I'll leave it. That's the 200 EMA. That's the 200 EMA, by the way. So give me 1 second here. And there's gonna be some white noise. Okay, so that's fixed. So with that said, we have the 200 EMA. The 200 EMA represents, I consider it to represent the last line of defense. It's not something I made up. This is things that I read and I'm just giving it out to you, the information. So the 200 EMA represents the last line of defense. I also have an anchor VWAP on there. Just something I'm mindful of. The anchor VWAP to me represents where price was an agreeable price for this asset, whatever it would be. Right now, the AVWAP is at 163. So the way to look at that AVWAP is if price is below it, it's considered undervalue. If price is above it, it's considered overvalue. Now, right now, Oracle is undervalue according to that VWAP, right? So buying Oracle underneath 163, not a bad idea. I also have the RSI on here, and we know that the RSI represents oversold and undersold and oversold. So if it's below that midline, it's a 50 midline. If the RSI is underneath that, it's considered undervalue, and if it's above it, it's considered overvalue. Now, if we're buying something, I would not want to see the stochastics above 50 if I'm buying something. And currently, right now, the stochastic is at 45. I like that. So that's the weekly time frame. We're really done with the weekly time frame. But what I would like to add on to this and employ is some Fibonacci's. Add the Fibonacci line. Okay. So we're going to add Fibonacci's here. And I like using Fibonacci. I use my lines a little bit differently. Well, let me explain that to you. 1 second here. So we're just plotting the high point and that low point, I think. Okay, there we go. And what I'm gonna do is let's look right here. All right, let's look right here. Okay, so we plotted the fib, right? We'll leave it. Let's see, we got a low. We're gonna go here, and then we're taking the top one to this high point. This red line will go away, and I'll tell you why that red line went away. I'll tell you why that specific one went away. And we'll take this one away. I'll leave it for an example. Okay, so watch this. Now, we know that trading is about probabilities. If you don't know, you know now. Trading is about probabilities. You can be at the right stock, in the right asset, whatever, or the right crypto, at the right price point, but the wrong timing in trading. Because in trading, you kind of want to give yourself room for say like a stop loss. And this goes to why you don't want to have your stop loss so close. You want to put it below a structure point. For example, below a structure point would be, in this example, I'll take this green line away, and we're just going to make it red to represent a stop loss. And I'll label it stop loss. So you want to give yourself room for your trade to play out. So just say this will be the stop loss. It's underneath the structure. If price goes below this support, then guess what? The structure is broken at that point. We'll just wait to position ourselves for another opportunity. And when I'm speaking about trading, I'm thinking in months. I'm not thinking in weeks. I'm not thinking in days. I'm not thinking in hours. I'm thinking in months. So if you're not trading in months, I highly advise you to. But also on top of that, this may not be the channel for you, because I'm going to speak about holding trades in months. And our group has been successful at doing so. So with that being said, we have the wholesale area here, and I'm going to color code it. Hopefully I clicked the right one for you. All right, great, green. This is my wholesale area. This is my buying area. This is my demand area. Whichever word you want to use, that's what this is. This means buy, right? This is my buying area. Now, up top, you have what I call a retail area. For business owners, you know what that is, right? You want to buy things wholesale. I mean, anybody should know this is basic economics 101 or business practices 101. So with that being said, you want to be able to buy in a wholesale area. This middle area is considered a fair value or an equilibrium area. This is where I would say that people agree with price, where the buyers and the sellers, where they agree that this is a fair value price. Fair value, that's where that comes from as well. So we're looking to buy wholesale and sell retail. We want to buy low and sell high. If you believe that Oracle is a good company, a lot of people would. I believe that they're in the S&P 500 as well. So with that being said, I believe that they are. I believe that the people that come up with the S&P 500, they did their research a lot more intensive than I would. I'm just a chartist. I like looking at the charts. I go based off of numbers. I believe that men lie, women lie, but numbers do not lie. And that's what I see in the charts. I only see numbers, right? So with that said, and let me check the chat just to see if I have any questions. No questions at this moment. I'm okay with that. All right. So with that being said, we're looking to buy wholesale and sell retail. Now, this is the golden ratio. The golden ratio is a potential number. It's a high target. It's a long shot number where price could potentially go if it breaks above 345. Okay. Let's see what I have. That's the weekly time frame. Now, why do you have these other time frames? The other time frames is considered multiple time frame analysis. There's a book, and the book author is Dr. Alexander Elder, and the book is Come to My Trading Room, or Coming into My Trading Room. So he talks about the multiple time frame analysis. I'm not going to go deep into that. I can speak about that at a later date, but and I do go over it as well in some educational information as well. So with that being said, think of it like a tide, a surfer. Be a surfer. Think of yourself as a surfer, and you're going to go get on a wave. You're going to approach this wave. Now you're waiting. The higher time frame is showing you that there's a big wave building up. Now, as a surfer, do you want to get in early, or do you want to get in at the bottom to ride that wave up? I'm not a surfer. I don't know a lot about it. So if you're a surfer, excuse me if I'm saying this incorrectly, but just follow me and envision a surfer. The weekly time frame is you seeing a big wave coming. In the daily time frame, what I have here to the bottom left, maybe it's bottom right for you, is yourself entering in at that dip, by the dip. Okay. So on the daily, you're buying the dip on the daily. The weekly is the bigger time frame. Now, what day do you buy? You buy on the dip. That should make so much sense. I hope it does. On the daily, you're buying the dip. So we entered, or I entered Oracle right here as it was down. Now the dip, how do you find the dip, Tony? The dip is the stochastics. You have a low RSI here below the midline, and then you have your stochastics here. Now you want to see your stochastics. You want to see your stochastics below this 50 line. This is a little bit after the fact, but we will continue to see it rise, it meaning Oracle. So you want to be able to purchase Oracle down here while the stochastics, sorry about that, while the stochastics is below the 50 mil line, and then you could ride it up. But this isn't the end of the trend. Now, I say that as far as when to get into the trade, because you got the weekly saying, hey, I'm at a support level. It's a great time to buy. Now, the daily is saying along that week, I don't know if you can see my arm or if this even just making sense. You have the price, and then the daily is saying which day to get in. Do you want to get in on a day where it's up here or the day is down here? You want to get in on a day that is down here so that you can continue to ride it up. You get in at a great position, and then you're able to ride that trade up to its retail area. So the whole point of it is getting in on the dip. You really can buy low and sell high. Now we started out with two lines, right? We started out with two support lines and two resistance lines. Now, I also said that trading is about probabilities. Okay, so these trades, remind you, I said these trades take months. They take months. You can take a year. Maybe you get like a very good profit from holding a trade for a year, right? Now, with that being said, why did I mention the lines? The lines represents they're your support lines, of course, but also we're thinking in probabilities. Hey, if I don't take this trade, right? If I don't take this trade, you know what? I'm going to eliminate this just to give an example. We had our support line here, and then we had like another support line here. Just for examples, we're talking probabilities, and you're looking to buy a stock. Well, okay, I'm going to buy around. It doesn't have to be at 114, but around 114. I'm going to buy around there. I'm going to buy some. I'm going to buy 25%. I'm going to start a position around 114. What if price goes below 114? And this is something that you're thinking about holding. Maybe you have a leap contract. Notice I said leap. I didn't say a daily. I didn't say a weekly. I said a leap. A leap is a contract that extends about a year or over a year. And excuse my technical definition on that, but you can look it up. A leap, L-E-A-P-S, leaps, leap options. Now we're going back to the probabilities. This is probability one. You're not trading the whole market. You have a certain batch of tickers that you like to look at, or that you just don't have a lot of tickers, right? You don't have a lot of tickers that you trade. And I actually have a formula. If you have under a certain amount, you shouldn't have this many tickers in your portfolio. If you have under this amount, you shouldn't have this many, all the way up to like 1 million. You shouldn't have any more than 10 tickers. That's just me. You don't have any more than 10 stocks, cryptos in a portfolio. You don't want to be a jack of all trades. It's okay to be diversified, but being a jack of all trades, just imagine you're spreading your money thin. It's better to go deep. When you're building when they're building skyscrapers, they go deep into the ground first, and then they build it up. The deeper it is, the stronger it is. It's the same thing in stocks. All right. So this is probability 1. And then, okay, price goes below that. And this is something that you want to hold. Probability 2. So you took some trades here, you took some trades here, and you're looking to hold it. Mind you, you're looking to hold it up until this point. Now, this is the purpose why you don't want to trade. This is a reason, at least, why you don't want to trade a whole bunch of tickers. If you're trading a whole bunch of tickers, one, you're everywhere, and you don't have money and focus to be into the ticker and the trade that you're actually watching at that given moment. So let me check back for any questions. Okay, live 15 minutes. Great. So I hope that I answered. Well, if there was any questions, leave them in the chat. I'll make sure I get back with you. But this is a great opportunity for Oracle. I want to make sure that I showed you guys that. If you have any questions, leave them in the chat. Make sure you like, share, subscribe, and hit your notifications. Whenever I see a ticker, I will be sharing it. And I really want to focus in on helping people become prop traders. If you don't know what prop trading is, I'll make sure I provide some information regarding prop trading. But being able to trade other people's money instead of your hard-earned money is definitely a benefit. But the first thing you have to do is get the skill. Have the skill to trade first, then you can earn. But you got to get the skill first. It's better to teach a person how to fish than to give them a fish. You give them a fish, you feed them for a day. You teach them how to fish, they can feed themselves for a lifetime. So I want to leave you with that. Make sure you hit the links in the bio. Make sure you like, share, subscribe. And once again, if you have any questions, feel free to message me. I'm on Twitter. I'm on Instagram. And I hope that you have a wonderful Monday and a green week. Y'all take care. Have a great day.